There are lots of different investing strategies out there, and picking the right one as a new investor can be incredibly difficult. If you've been around the investing space for a little while, you'll know that Canadians have earned the reputation of loving the dividend investing strategy, aka investing in dividend stocks. There are lots of names out there that many of you will recognize. One that has grown in notoriety recently is Bell Canada, ticker BCE. Other such examples in Canada would be Fortis, TD, and TELUS. Of course, picking the right single stock position that produces a dividend can be hard as a beginner. In today's video, I'm going to do a side-by-side comparison of two ETFs that will give you broad exposure to all of these high-yielding producing dividend stocks so that you don't have to go through the struggles of picking the individual stock position, and ultimately you'll put money back in your pocket. Of course, we're going to start off by examining my portfolio and see how it's performing. We're going to buy some stocks, and we're going to see the dividends that we received since the last video that I posted. My name's Darren, and this is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners. Let's face it, there's nothing that's going to get you ready for that first day you start investing, and I do it by sharing my journey with all the ups and downs along the way. Now let's kick things off with another video recommendation. The movie is on Netflix. It's called Devotion. Devotion is an inspirational movie about Jesse Brown, the first black Navy aviator who fought in one of the most brutal conflicts in the Korean War. It chronicles his relationship between his wingman and the struggles that he faced as a black man in the 1950s in the Navy, and the ultimate sacrifice that he made, which made him one of the most decorated Navy wingmen. Now, this movie was excellent, and like I've told you before, my wife and I have busy lives with our kids and our jobs, and unfortunately we didn't get to watch this movie all in one sitting, but I have to say it was very well produced. It kept us on our seats, and each time we came back, we definitely wanted to see the end of it, so I would highly recommend it to you if you're interested in that kind of thing. So jump over to Netflix and check out that video. So let's jump right over into the portfolio, and we're going to check out how things are doing. So the account is up to $144,387. And as you know, if you've been following me, it's comprised of 4 accounts: my cash account, my TFSA, my RRSP, and our kids' RESP. And we're going to go through each one of those and break them down to see how they're performing. We're starting off in our cash account. Now, if you've been following me for a little while, or if you haven't, go back and look at my video library. I'm switching from the big bank, which in this case is TD, over to Wealthsimple, using them as our primary banking account. It is taking longer than I expected, but if you have a look here on the screen, you'll see that we went from earning 4.5% interest to 5%. So we reached another milestone. How did we do that? We're depositing my paycheck into my bank account, in the cash account, and therefore we're now getting 5%. So to date, we've earned $94.50 in interest. Now let's jump over into my kids' RESP. It's at $64,009. And you can see on the screen, it's great. It shows you what the expected returns are. In this case, it's $384,000. So we'll have to see how that works out by the time my kids graduate. The account is up to $27.89 over the 1 month. And over the 3 months, it's up $3,186 or 5%. Over the last 6 months, it's up $6,817, which is 11%. And over the last year, it is up $8,898, which is 16%. And of course, we have our all-time returns, which in this case are very similar to the 1-year returns because we've only had this account for about 1 year at this point. Now, this is a robo account. We do pay a small fee. As you can see here on the platform, it shows you your net deposit, your returns, and simple returns all in one simple place. So you can look at that and see how things are performing. And now down into our recent activity, we can see that since the last video, we bought QCN, QUU, and GLOV. If you're interested in those, look them up and see what's contained within them. Into my RRSP, it's up to $17,189, up $77 on the day, which is 0.4%. And over the last week, it's up $147 or 0.8%. And then over the last month, it's up $921 or 5%. And then over the last 3 months, it's up $709 or 4%. And lastly, it's our 1-year return of $2,126 or up 14%. And then our all-time returns are $2,058, which is slightly down from the one-year return at 13%. We have $9.39 sitting in this account, so not much. Since the last video, EIT has paid out $8.60 in a dividend, CAR UN 60 cents, and Plaza 19 cents, which is the $9 that you see available for me to use to purchase. So not a great deal, but this account is still slowly growing. Jumping over into my TFSA ups to $27,578 or $81 on the day, 3.3%, pardon me. Over the last week, it's up $130, which is 0.4%. And over the last month, it's up $1,161 or 4%. And over the last 3 months, it's up $943, which is 3%. And over the last year, it is up $3,040 or 12%. And lastly, we have our all-time returns, which is $3,034, which is up 12% on our all-time returns. Right now, we have $39.98 in that account, and that comes from dividends from the last video, which in this case you'll see is Plaza REIT at $1.17. Now that shows a manufacturer dividend. That's because I'm loaning stocks out. The remaining dividend is 23 cents. When you add them together, you get the entire dividend that would normally be paid out, and that's how Wealthsimple shows it in your activity tracker. All right, so let's jump over into the stock lending. We have earned 24 cents, and it has a nice screen here to show you your earnings. So only 24 cents, but again, it's continuing to grow. Next payday is June 14th. And at the bottom of this screen, you can see the different stocks that are on loan. The ones that are just showing right now without opening it are BAM, Plaza REIT, and REI, and it shows you how many shares that you are actually loaning out to other people. And of course, it breaks it down in American funds and Canadian funds, and it shows how much you're earning as you move along. So if you don't have that started up, you should definitely introduce that. Here we're over in passive. I'm using passive to set my asset allocation and therefore then decide which stocks I'm going to purchase. We're 90% accurate, and that's why I love passive. If you aren't using passive and you're a Questrade user, you can get it for free. If not, you do need to pay a small fee. So here is the asset allocation that I have set up. In this case, we're going to look at the first one here. The target is 40%. So I've set that I want 40% of VFV, and I hold 39.8%. And then if you go through each holding, you'll see the target that I've set and how much I want. The one that's outstanding is XEC, and that is the one that we're likely to buy the most of in today's purchases. You can see at the bottom some of my more single stock positions that I hold a little bit less of at 2 or 1%. Okay, with the magic of editing, we have $1,039.98 to invest in, making our total amount $28,578. So we're going to go ahead, we're going to use passive. Here it's loading up what the targets are, and we're going to go through them and purchase them as they are recommended. It's saying we should purchase Plaza REIT with 3 shares, QQC at 2 shares. We should buy VRE 3 shares, and then we should purchase XEC at 28 shares, and lastly it will be XIC at 2 shares. So now we're going to go ahead and jump over on the other side, and we're going to start purchasing each of these with the allocation that came up there. So the first one that we're going to go ahead and buy will be XEC. We're going to buy 28 shares of that. Perfect. All right. And then we're going to jump back over into passive to see what we should be buying next. Okay, XIC will be the next one we purchase, and we're going to buy 2 shares of XIC. Perfect. Checking again, and now we're going to go ahead and we're going to buy VRE. And of course, VRE is that ETF that has all the different REITs in it, so we're going to buy 3 shares of that. Perfect. Okay. Back into passive, and now we're going to buy QQC, which is the NASDAQ 100. Again, it purchases, it's a ETF, which purchases a bunch of positions. And lastly, we're going to buy 1 share of XEC. And then we're going to go and we have 1 more share of QQC that we can buy, so we'll just throw that in there and make that last purchase. And the last one we're going to buy is Plaza REIT. We're going to buy 5 shares of Plaza REIT. Perfect. There you have it. We're 91% accurate. We only had $2.19 left. And as you know, I throw that as a remainder fractional purchase back into the account with QQC. And now we're going to check over our asset allocation to see the targets. And as they're creeping up, as you can see, we know our target and we know what our actual is. And we're going to continue to grow that. So next video will be a bit broader purchases, no doubt, because it bases those purchases on the current price. It updates real time. Okay, let's do a side-by-side comparison of 2 ETFs that hold dividend or high-yielding dividend stocks. One is XEI and one is VDY. We're going to start off with XEI. XEI is a BlackRock product. It's the iShares S&P TSX Composite High Dividend Index ETF. It trades for $25.62 currently as of today, and year to date it has returned 5.92%. It does have monthly dividends, so if that's something that you're interested in, this is definitely going to be a fund that you should be looking at. And then you're going to get that monthly return. Now, if you're perhaps younger, maybe this isn't a fund that you want to be interested in. Maybe you're more interested in some growth, but perhaps you're closing in on retirement or your living situation. You need to have some monthly income generated with your savings or passive income. This would be a good fund for that. So looking at this, the average return on this account, or this ETF, pardon me, is 6.62%. And cumulatively, since its inception, it has earned or grown 130%. It has 75 holdings within it. And currently, it does qualify for a DRIP, so you can take those dividends as they come and reinvest them. That's one way to increase your total returns, of course, unless you have some need to spend the dividends as they're coming in for you. All right, so now we're going to look at Vanguard's product, which is VDY. It is also a high yield dividend ETF. It's called the Vanguard FTSE Canadian High Dividend Yield Index ETF. It currently trades for $44.83 Canadian, and it is monthly, similar to XEI. So once again, if you're looking for that monthly dividend generating income, this is a fund that you could be interested in utilizing. So looking at the fact sheet, we're going to look at what's contained within each of these ETFs. So here we are looking at the XEI, and we're just going to look at the top 10 holdings. So you can see here we have Suncor Energy, Canadian Natural Resources, Enbridge, Nutrien, Toronto Dominion Bank, Royal Bank of Canada, TELUS, BCE or Bell Canada, TC Energy, and Bank of Montreal. What we're looking at is energy companies, telecommunications, and banks. And you can see it tells you the percentage. So for instance, the top holding is Suncor Energy, and it's 5% holding. Almost equal weighted for the top 10, or very close at any rate. So let's look at VDY. VDY's holdings are, the first one is Royal Bank. 14% of this particular ETF is held in Royal Bank. Then you have Toronto Dominion Bank, Canadian Natural Resources, Enbridge, Bank of Montreal, Bank of Nova Scotia, Suncor Energy, Manulife, Canadian Imperial Bank of Commerce, TC Energy. So same thing, very similar holdings you can see between the both of them. It's just each fund allocates a different security as their primary holding and how much of a percentage to each. So in this case, the weighting is considerably different. They have 14% of this particular ETF gets its return simply from Royal Bank, where the other one, XEI, it's a little bit more balanced. As far as the sectors go, it's very similar. We can see that we have financials, energy, and telecommunications, just like XEI. So very comparable. It's just the weighting with which they do them are slightly different. So jumping over to a comparison tool, we're going to talk a little bit about each fund as far as some metrics and things that might be important for you that you might want to consider. So looking at a comparison tool over the performance of both of these ETFs over the past little while, we can see in this particular case that VDY actually does outperform XEI. Now that's not to say that one fund or what happens in the past doesn't always dictate what may happen in the future. So it's possible that XEI could outperform VDY. And the performance difference is small, but if you're looking at total returns and you want to maximize your returns, then VDY might be the right one for you. And depending on which broker you're using and the amount that each share costs, for instance, if you're using Questrade, you can't do fractional share purchases, but with Wealthsimple, you could. That may play a part in which stock you might want to hold based on how much you're putting into your account every week. Let's look at the expense ratio, or the management expense ratio. So that is how much it costs to basically purchase this particular ETF. So you can see they're actually the same. The MER, or expense ratio, on it is 0.22% for both. So effectively, they're the same and doesn't really need to be compared to each other. Going down to the dividends, this is something else that's important to note. Is a lot of people like XEI because it has a higher yield for its dividend. XEI pays out 5.24% as a yield with its dividend, where VDY pays 4.55%. But thinking about what I said, VDY does perform better over the long run, and you definitely want to be looking at total returns. Now let's look at the dividend history. So we're going to start off with VDY. So VDY, we know it pays 4.23%. It is paid monthly, like I said, and at dividendhistory.org, you can go back and look at the dividend to see what it has been paying out. And we can see dating back into 2023 that the dividend with this particular ETF has definitely gone up and down on quite a regular basis. We can see here that in 2023, in August, it was up 15%, and then immediately following that, the next month, it was down 1%. So it may be important if the dividend is not very stable, maybe you want to choose one over the other. So let's look at XEI. Like we said, it pays out 5.24%. But if we look here, the dividend history is a bit more stable. In fact, I would argue it's quite a bit more stable. It pays out currently 11 cents a share, and we can see that in April they dropped 5%. But if you look back in the history, dating back over the same time we looked at VDY, there's just been a steady increase every 2 to 3 months where they increase their dividend. So all in all, both of these funds are very similar. They both qualify for DRIPs. You can use them or purchase them across various platforms, and they hold very similar holdings. The important thing is that you need to examine which of the holdings and how they're weighting. That may be important to you. Their MERs are very similar. The dividend is slightly higher as a yield with XEI, but VDY does perform a bit better. So ultimately, do your own research, check it out, make sure you pick which ETF you think is going to work best for you. Thanks for making it this far in the video. Remember, I have a few links that you can check out in the description below. The one is if you're new and you want to get started with Wealthsimple, look for the link with my code. You can use that. It'll get you started. You'll get some money in your account to start trading. If you enjoyed the content and you want to support the channel, I do have a link in the video description for you to purchase me a coffee because my channel is not monetized. It's something that I do on the side. So if you really like the content and want to support me, go ahead and purchase me a coffee. It'll help me get through some of the editing and the time that I spend putting the videos together. So again, thanks very much for watching this video. If you liked it, hit that like and hit the subscribe, share it with your friends, and we'll see you on the next video. And don't forget that you can follow me on Blossom Social.